Hi, this is Adam Koo here, and in this video, we're going to show you a very low risk, high return options trading strategy that we use to generate really high profits just before a stock releases its earnings. In fact, 400% return trading JP Morgan options in just 5 days. So to explain this trade to you is the person who executed this trade, Mr. Bang Pham Van. So Bang is a professional options trading coach together with me at Piranha Profits. And Bang has been trading options now for the last 18 years. He's one of the most consistent and most creative option traders that I know, generating 50 to 100% return on his portfolio consistently. And the reason I say he's one of the most creative traders is because he develops his own unique strategies to profit in any market situation. But before you watch how Bang trades, I'd like to share with you a bit about his personal journey because it really touched me when he shared it with me many years ago. Now, I don't know whether you have seen pictures of these Vietnamese boat people. As you can guess, Bang's from Vietnam from his name, right? And he was born in 1969, so he's a bit older than me. And in 1975, he was 6 years old. That was right after the Vietnam War when Vietnam was going through intense poverty and crisis. And his parents attempted to get out of Vietnam as refugees, and his siblings were successful. They got on a boat and they traveled and eventually made it to the United States. Now, Bang was not so lucky because the boat that he was on almost sank, right, because of bad weather. In fact, he saw at 6 years old many of the other children and people dying around him. So eventually, he didn't make it, and he was in Vietnam going through this hardship and crisis. His mom was a single parent because his father then passed away shortly after that. But he worked really hard and he got into the University of Vietnam and was later headhunted many years later into Procter and Gamble, P&G, one of the Dow Jones multinational companies in the world. In fact, he was the first Vietnamese to be hired by a multinational company at the time to be promoted to senior management, right? He was a CFO, the Chief Financial Officer of P&G back then in Vietnam. He was then sent as an expatriate to Philippines, to Indonesia, to China to be the CFO in those countries. And 9 years ago, he came to Singapore to be one of the senior finance managers in Procter & Gamble Singapore. Now, during the whole journey, like many managers, he made a pretty good income, but he did not know how to grow that income, and he knew that he had to find something that will give him passive income for the rest of his life. So about 17 to 18 years ago, he started learning about how to trade the stock market and options, and he became one of the best option traders around. And so it's really my pleasure, my honor to work with him right now in Wealth Academy and Piranha Profits as my fellow trainer and coach to help you to develop passive income, to generate a new stream of income for yourself in the financial markets. So here to share with you his trade and how he executes trades is Mr. Bang Pham Van.
Hi folks, this is Bang here. I just want to share with you the ideas of how to use option to make money. In this particular case, I use the straight call option to play earning. So I look at my portfolio or the position statement right now. I have like 20 contracts on JP Morgan with 105 strike price expiring on April 18, and I have another 10 contract also JP Morgan with the strike price of 105 again, expiring the 1 week before that, so 12th of April. And why these two dates, right? So if I go to JP Morgan, I click onto the earning icon here, it say the earning will be released on 12th of April. So these two strikes will be expired only after the earning release. So the reason why I bought these two date to expiration, because the option will hold value pretty well if it expires after the earning. Because with earnings, anything can happen, right? The surprises on the upside, downside, volatility, stock price movement, etc., etc., right? So it won't go to zero before the earning release. So that's why I bought it with the expiration after the earning. What I'm going to do here, so when I bought it on Thursday, which is this one, right? On Thursday, 28th of March. This one I also bought on 28th of March. Look at the stock price on 28th of March. This is the one. So stock price was at around $100 per share, and I bought 105 calls. The share price has to go to that level by the expiration, have to cross 105 plus the premium I pay for me to make money, right? Quite a distance from where it was when I entered. So what I want to play here. So actually I play with three scenarios that one of them could happen, then I make money. So basically, when it was 100, it's kind of oversold. The stock dropped a lot from 108 down to 100 or below that, and I say now it has some signs of recovery. So I play with the recovery here. So I was hoping that the price will increase towards the earnings. So that's one scenario. Number two, IV, by the time I enter, it was very low, and I expect the IV will shoot up as we move towards the earning. Because when I long an option, IV increases mean I long Vega, right? So I will make money as well. And number three, if I hold on to the options until the expiration, the price has to pop and goes beyond the 105 plus the premium I paid for me to make money. So one of the three conditions, either of them happen, I could make money. Guess what? Today, the price has recovered from 100 now to 103. That's why you see in my portfolio, option is making good money here. So both position, one is making like 1006, the other one is making like 660. Quite good. Now, how much is the money I have made until now, right? By the way, today is Monday, April 2nd, so just 2 days, right? Or less than 2 days. When I bought the call, it was at, this call I bought at 29 cents, and now the market price 108, okay? So if I do the math, right, 108 divided by 29 cents, almost 400%. The premium I paid is now almost quadruple. So I make like almost 400%, 372. Similarly for this call, so I enter at 21 cents, and now the market price is 86. I do the same math, 86.86 divided by 21 cents, 0.21, that is 400% again, 4 times. So these two options I enter on Thursday last week now is quadruple in value. Before I go into what I'm going to do, I show you on that day, or the day after rather, I sent out the alert to my students that, hey, last night I loaded a bunch of JP Morgan 105 strike call option expiring on 12 and the other one expiring on 18. And I bought it for this one 22 cents, this one I bought it 29 cents. In fact, this one I bought 21 cents. Okay, so again, I told them the reason why I enter, I play with the earning here because both options will be expired after the earning release. So either of these scenario happen, I could make money, either price recovery before the earning, IV rise, and number three, the price popping after the earnings. One of the scenario happen, I could make profit. Now, in case I'm wrong, meaning none of these are going to happen, guess what? I have no plan to cut loss because the premium I paid is not significant. It's small money anyway, since the risk is low, right? And it may not worth the closing cost because you have to pay the commission and you also have to pay the slippage between the bid and ask. So then I advise them, hey, if you want to follow me, trade with the money that you can afford losing on, okay? And some of them like Dennis say, oh, okay, I'm joining you, okay, kind of thing. Okay, guess what? Today, we are making good money right here. Now, when I have that quick money and so good profit, right, 4 times, I would take some money off the table, okay? So because I already quadruple my money, right? So maybe I close 25% of my position, make sure I get back my original capital. So I have no chance to lose anymore, right? And I let the 3/4 or 75 of my position to continue to run, hopefully up, right? And still have 1 week until the earning release, which is on April 12th. And maybe before the earnings release on 11 or something, I may want to close some of them and leave the rest until the after earning. So that's maybe my plan, okay? But for now, I just make sure that I get my original capital back and let the house money run. I play with the house money, and hopefully we can make extra money from that as well. Now, not only one account. As you know, I'm trading multiple accounts, so this is just one of them. I will do the same thing for my other accounts as well. So guess what, now for this 20 contracts, because I made 4 times of profit, I just closed 5 contracts out of 20, meaning I already got my capital back, right? Similarly, I will close 2 or 3 contracts here and let the rest run. So very simple. Right click on that position and close. Now I'm not closing on 20, I close just 1/4 of them, right? Because that's my original capital. So just 5 contract, okay? And I close, let's say for 11.11. So now I sell to close. So I need to increase the credit I can collect. So confirm and send. Done. So 5 contract has been closed. Now my position should reduce to 15, right? So I got my original money back. Okay, that one position. The other one, let's say I close 3 contract from here, right? 3 contract, and I increase it to 91 cents and close. Same. So I reduce my number of contract down to 7. So now whatever left in my position in JP Morgan here is the house money. Okay, I play with the house money and let it run and see how it goes. I see you back in about a week before the earnings. I'm planning to close half of the remaining position before the earning and let the rest go, but I may change my mind. Okay, all right, let me summarize the trade after the first round of closing. So basically I enter the trade on a long call on JP Morgan, leveraging a very low premium at that point in time, and I entered the trade on 28th of March, and I entered with 2 trades, one with 10 contracts expiring on April 12, paying 21 cents per share. The other order I got filled was 20 contracts with the expiration on April 18, and I paid 29 cents per share. And therefore I had paid for 2 trades total $790. So basically 10 contract times 21, and the other one 20 contract times 29, and 100 share per contract. So $790 for the combined 2 trades. And that is also my capital, also my potential max loss. Today I just closed 1/4 of my position. So on the 10 contracts, I closed 3 and I collected $273 because I collected at 90 cents per share. And on the other trade, I closed 5 contracts out of 20 and I collected 1.11 per share, so that is $555. So in total I collected $828, which is more than the capital I had paid for entire 2 trades when I entered, right? So essentially I got all my capital back, and hence the remaining position will be for free. So I have 2 remaining positions. One is 7 contract expiring April 12 and at 0 cost right now, right? And the other one 15 contracts expiring April 18 at also 0 cost. And both options are expiring after the earning release. So I have pretty good deal right here. Whatever it may happen, I have nothing to lose right now. Okay, we come back when I close the other part of the trade before the earning release. Hi folks, I'm going back to the trade that I used the long call option to trade on JP Morgan. Remember just a few days ago on April 1st, I closed a part of my position. In fact, I closed 1/4 of the position to make sure I got all my original capital back, because I make quadruple of money in a very short period of time. So I took the money off the table. Now I'm playing with the house's money, right? So today is April 5th, 4 days after I took the money off the table. It's time for me to take another round of profit off the table, right? So the earning will come out in the next days, and I just want to make sure I lock in some of the profit before the earning release, because anything can happen with earnings. It can go up or it can go down. I just make sure that I got some profit locked and loaded, right? and let the rest run through the earning and see how it goes. Okay, so by doing it, I have nothing to lose. In fact, I make guaranteed profit on the trade already. So now remember, on this position I have in my position right now, the 105 call expiring on April 12 and the 105 call expiring the week after on April 18. Both are making very good money. Remember, this is the 75 of my position, and one is making $1,000, the other one is making like $2,500. If you notice, I also have a put spread which is losing money, but a small amount of money, so forget about those, right? Just focus on the two legs that I'm taking action right now. So what I'm going to do, because I make so good money right now on these two call options, I just close half of my remaining position for both trades. So on 105 expiring on 12, because I have 7 contracts, I will probably close 4 of them, right? And remaining 3, I let it run through the earnings. So I close this one, just right click on it and close order. I'm not closing the entire 7, but I close 4 of them, right? So remaining 3, I let it go. So I can bargain by raising the premium to, let's say, 168 and see if it gets filled. It's not, leave it there. On the other hand, I also close half of my 15 contracts here, so closed order, and I close half of them as well, so maybe 8. I let the 7 run through the expiration. So I raise it to 193, see if it get filled. Both orders are pending right now. Okay, so JP Morgan, forget about these 2 pending trades. I'll replace there. So this one, perhaps if I want to get filled, I have to reduce it to 167, see if it get filled. Okay, yes, so 167 it is. And the other one, I need to raise, the other one already got filled also. So I get both filled right now. You look at my position, the 105 expiring April 12, the quantity is now reduced to 3. And the 105 expiring the week after reduced to 7. So remember, this is only half of my remaining position that I will let it run through the expiration. In fact, after the earning, and then depends on the situation, I may want to take the money before the expiration. Probably that's the plan. All right, I come back after the earning, which is on April 12 before the market open, right? So this option expire on that day, but at the close of the trading session. So it will be interesting to see how the option behave with the earning release, right? Again, I have nothing to lose. In fact, I already locked in a significant part of my profit. So I just let the rest run. We'll come back after the earning to see how it goes. Alright, let me summarize the trade after the second round of closing. Remember, after the first round of closing, I still have remaining 2 positions. The first one with 7 contracts, call option expiring on April 12 at 0 cost. And the second position, 15 contract, call option expiring on 18 April, and it's also at 0 cost. Both options are going to expire after the earning release. Again, I'm playing with the house's money, so I already got my money back. I have no chance of losing money anymore. In fact, now I'm closing a part of my position to lock in some of the profit. So the second round of closing, which just happened right now, I closed half of the remaining position. So 4 contracts expiring on April 12, I closed it for $1.67 per shares, collecting total $668. And the other one, I closed 8 contracts and collecting $1.93 per share. In total, I collected $1,544. So combined profit, I got total $2,212 profit for half of the remaining position. So now this 2002 I already locked and loaded, and I won't give back, right? So the remaining position I still have in my trade is 3 contracts at 0 cost again, and 7 contracts at 0 cost also. So I will let these total 10 contracts run through the earning release and see how it will behave. I know that after the earning release, implied volatility will crush and it will impact my position, which is reduce my premium. But on the other hand, I also betting on the price to pop after the earnings. So that means I'm betting on the delta will work harder for me and it will overcome the impact of the Vega or the volatility crush. So this is something like a pretty risky bet, but again, I'm playing it with the house money because I already got money back, and in fact, I make good money on the profit as well. The remaining, I just allow myself to speculate a little bit. So see how it goes. Just interesting to see the whole thing play out after the earning. I see you back after the earnings.
Hi, so if you like the video, you can subscribe for more videos by clicking the subscribe button. If you want to find out more about our live training courses in Asia, go to wealthacademyglobal.com. For online professional stock and forex trading courses, you can go to piranhaprofits.com. So this is Adam Khoo, and I'll see you soon.